Good morning everyone and welcome back to Morning Markets here at True Potential. It's Wednesday the 13th of December. My name is Kevin Kidney and today we're going to focus in on UK GDP and US inflation data. So beginning this evening we will have the meetings of central banks in the US and then tomorrow in the Bank of England and the ECB. So let's focus in on data prints that will occupy the minds of those policymakers. Let's start with UK GDP data, hot off the press this morning. What it's showing is that the UK economy continues to struggle to generate meaningful growth. Underlying growth momentum in the UK is around about zero for the last 4 months. That's very disappointing. And what we're seeing is that overall year-on-year growth in the UK has halved through the autumn. And that suggests that there are still huge difficulties in the UK with generating growth as we face headwinds from inflation, but also the struggle to get more people into employment from being classified as sick in particular. So this is what will occupy the minds of the Bank of England tomorrow. Recall that my colleague Chris Leland yesterday updated you all on the very soft labour data we saw, which showed some encouraging signs and a moderation in wage data. And of course, as you can see on screen, gilt yields, that is the yields on sovereign bonds in the UK, fell substantially yesterday. That is prices rose, reacting to this disinflationary data. But there's still a lot of work to be done to bring inflation down in the UK, and that is what will probably occupy the minds of the Bank of England when they update us all tomorrow lunchtime. But good news from the US again on the inflation front. Headline CPI came in at 3.1%, a modest fall from the month before. More encouragingly, the underlying trend of inflation there, that the last 6 months of data is even lower at 3%. And that's a substantial fall from 6.5% at the start of the year. So over the 11 months of the year, inflation is more than halved in the US, and the underlying trend suggests we can get into the twos, possibly as close as 2.5% by the spring. Equally encouraging data within core inflation, albeit not as big a drop. Inflation there came in at 4%, but again, this inflation momentum, focusing on the last 6 months of inflation data, suggests actually core inflation is around about 2.9% in the US. So we're not that far away from being around about 2.5%. There are going to be some difficulties ahead though. Services-based inflation, and it's important we focus on services, given the US is a services-based economy. Inflation there is still around 5%. So we likely need to see further weakness in the US jobs market for price pressures in the services industry to cool. But in summary, the trend for disinflation, that is falling price pressures, continues. The US has updated us and it's an encouraging trend, and we're likely to see similar stories from both the UK and Europe as we go through the month. Thank you very much and take care.